Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vani Motiwala, along with me, Sheila Finance as well. Sheila, a very good afternoon to you as well. But markets clearly don't want into the move and to the color that you are wearing today, and that it's some subdued trade that we're seeing coming in the markets.
Absolutely, a completely subdued trading session. But yes, maybe Nifty wants to turn the course for the better. Looks like it, Vinny.
Because at least trying to turn.
At least trying to turn. Actually slipped into the negative territory, but we are actually clawing back to the positive territory, as you can see it on your screen. Nifty now trading flat with a negative bias. Let's take a look at what Nifty Bank is doing, because that has been playing the spoil sport for a while now. It was actually underperforming the benchmark indices in the morning, continues to underperform the benchmark indices as we speak. Let's take a look at what the broader markets are doing, because mid-cap as well as the small-cap index for the most part of the trading session were in the positive territory, and they are trying to hold on to those levels. It's a small cap index actually that's outperforming with 0.4% uptick coming in. Advanced decline ratio at this point in time is definitely neck to neck, because earlier on in the day you did have the advanced decline ratio very much tilted in the favor of the gainers. Right now it's a neck to neck advanced decline ratio that you're getting to see. Talking about the sectoral indices, then IT index is the top sectoral loser, followed by PSU Bank, which is actually seeing subdued moves of approximately 0.5%. Also, media index is under pressure. But on the flip side, you have auto, FMCG as well as realty index trying to hold on to some sort of gains. Also, you have metal index that's given up some of its morning gains, but nevertheless in the positive territory. So that's the way how the markets are looking like at this point in time. Vinny, yes, really trying hard to move to the positive territory.
Trying hard to move to the positive territory by the end of the day, hoping that it reaches the positive territory. But on that note, let's get started with those stock-specific news, and we're seeing a lot of stock-specific action. So, to talk about on the technical front, we have Kunal Bothra, while from the research team, we have Lisa as well as Ankita joining in with us. A very good afternoon to all three of you all as well. And I'm going to be starting with the first stock that is moving in trade today. We're seeing Green Panel. Now, this one isn't focused on the back of a brokerage note that we have, and it's from MK. They're maintaining a buy rating given a target price of 440 rupees per share. Now, MK actually conducted a channel check. Now, that channel check is suggesting that the volume trajectory for the MDF segment is expected to remain weak even in Q2 FY24, and owing to the subdued demand environment and sustained pressure in terms of the MDF imports as well. Now, over timber prices in the southern region have further firmed up as well, and with a likely 10% quarter-on-quarter basis increase that we're seeing in terms of this raw material for MDF segment as well. Broadly in the northern region, yes, the prices have remained stable, but the southern region is where that increase in prices is also seen. However, the decline in resin prices as well as lower marketing spends could be something that would provide slight bit of a relief for Green Panel in Q2 FY24, but subdued demand is surely a concern that MK is highlighting in terms of the channel check that are suggested by them. So on the back of that, they see some near-term challenges that could pose some downside risk for the company. They're maintaining their buy rating, but a target price of 440 rupees per share based on the 18 times FY24 PE valuation is what they're picking up at. And as of now, that's why the stock is trading in red, down 2%.
Alright, moving on, let's talk about the rice exporters, especially the Indian rice exporters. Let's take a look at what actually LT Foods, even for the matter of fact, Korean Foods is doing in today's trading session. All of them actually seeing some sort of green on the screen. You have source-based reports on the various agencies that have come out overnight, where they're saying that the government is likely to cut the floor price or the minimum export price for basmati rice to about $850 per metric ton from about $1,200 per metric ton right now. This move will actually help the millers and the traders to ship out the rice grade after they have complained about a sharp drop in their overseas sales. Remember, last month you had the government that fixed the floor price for basmati rice shipments at around $1,200 per metric ton to help government ensure that non-basmati rice was not exported as basmati rice. But now we are expecting a cut to come about in that price, and that's the reason why all of these stocks are buzzing in trade. For now, it's a source-based information, waiting for confirmation on that.
Okay. Let's move on and talk about the next stock that is in focus, and on the technicals, Kunal, you've picked out MCX for us. What a move that we've seen in the stock in the last 1 year, 6 months, strong returns that we've seen coming in. Now, MCX at the current levels, would one actually start booking profits, or would you still suggest a buy for this?
So the reason for flagging of MCX is it was one of the calls which I had given last week at sub 1800 levels, when the stock was showing signs of some stability, not a major recovery. But right now in the last couple of days, stock has shown a very good breakout. It's come back to that 1900 mark. It's completed a bullish flag pattern on the daily time frame, and looks very attractive in terms of the potential upside the stock has could show over the near to medium term. My sense is that MCX at current levels could be bought into. I would probably expect the stock to cross even levels of 2000 over the very near term.
All right, so that's the take coming in on MCX, where he's expecting it to cross about 2,000 rupees in the near term. But Lisa, coming to you, Welspun Corp, why is this stock in focus today?
It's in focus because it's a wholly owned subsidiary, that is Syntex BAPL. They have signed an MOU with the Telangana government, and this is for manufacturing of this is to set up a manufacturing unit of around 350 crore. They'll be investing around that much amount, and it will be mainly for the purpose of manufacturing water tanks as well as pipes. Now Syntex, as we know, it's a prominent name in water tanks, but with this project they'll be pouring into the pipe segment. So what the management said that with this move, it will strengthen their presence in the building material vertical as well. And talking about the investments, the overall investments that will be spread over 3 years, and the company mentioned that the project is still in its initial phase, and for this year they'll be acquiring land worth around 50 crore. And it furthermore stated that more information regarding this project that will be provided at a later date. Well, on the back of this news, Welspun Corp, it gained around 3% in early morning trade, but now it has cooled off its gains, but still trading higher around 1.7% as we speak.
Let's move on to the next one, and that is Fortis Healthcare. Ankita, this one is up almost more than 1% as well. What is the news flow here?
That's correct, Vinny. Fortis Healthcare is up more than 1%, and it is not trading at the day's high. It has cooled off a bit, but 1% up nonetheless. Now that is coming on the back of the fact that the company's board of directors approved the proposal to acquire the Kolkata-based artistry properties at an enterprise value of 32 crore rupees. Now the acquisition will be done via a 99.9% stake buy in the company through a share purchase agreement. Now through this acquisition, the pharma company is also set to gain ownership of a building that is owned by Artistry Properties, which is located just adjacent to the Fortis Hospital at Anandpur in Kolkata. And on the back of that, we can see an uptick of 1% coming in on the stock.
All right, guys, Fortis Health for you, but Kunal, PNB, you've been actually bullish on some of those PSU banking counters. Now, do you think it's time for PNB to shine after the 72% uptick it's seen in the last 6 months, or do you think it's time for it to take a breather now?
I think the momentum should continue for PNB over the near term. The stock has shown a very strong breakout above the 60-62 levels. That was a pattern which the stock had made on the quarterly charts, and post that from 60 plus mark, the stock is almost touched the 80 levels today, which means it's a stellar recovery of more than 30 to 35% for PNB in that kind of a time span. Looks attractive. My expectation is that hopefully in the next 12 to 18 months, we could be looking at the stock coming to the zone of 90 to 95, which means a further upside potential of at least 20% in that kind of a time frame.
Okay, let's move on to the next one, and that is Maruti, that is in focus, and this is on the back of a brokerage note that we have from HSBC, where they're maintaining a buy rating, increase the target price to 12,000 rupees per share from the previous target price of 11,000 rupees per share. What they believe is that the recent hikes in terms of reinvestment rate by Maruti is not necessarily negative for the shareholders. In the short term, market share has peaked, but medium term, they believe for more models could put over there in terms of the market share for the company. And in terms of Maruti Suzuki's valuation, premium to the Nifty has shrunk 33% versus historical levels of 50%. So that is why they are keeping an eye out on Maruti Suzuki. As of now, trading almost subdued, and it's just down 0.3% in trade.
All right, let's shift focus. Let's talk about a stock that has been buzzing in trade for a while now, and that definitely has to be JSW Energy. You have JM Financial today that's come out with a note on that particular counter, where they've raised or rather upgraded the stock to a buy rating from a hold rating, and they've set a target price of around 500 rupees per share, which implied an uptick of approximately 19% from the last closing price. We also spoke to the management of JSW Energy earlier on ET Now, who were very upbeat on the prospects going ahead. Also spoke about the fact that how they're going to shift now from 2.0 strategy to 3.0 strategy. Also spoke about the power situation in the country. So positive commentary also came in from management of JSW Energy to an exclusive interview with ET Now. And apart from that, now apart from Jefferies and other brokerages, today you have JM Financial, which has upgraded the stock to a buy from a hold rating, setting a target price of 500 rupees per share.
Surely keeping an eye out on that. But let's move on to the next stock, and that is UltraTech, that is in focus as well, Kunal. Why are you picking up this stock? How are the technicals looking like for this one? Very subdued returns in the last 6 months. So now, is there a positive chart indication coming in?
Well, the stock in the last 5 days has fallen very sharply from 8700, 8750 mark. UltraTech Cement till yesterday was almost at 8150 odd mark, which means a sharp drop of more than 600 points for the stock in just the last 4 or 5 trading sessions. Now, this has led to the indicators being into the extreme oversold zones for UltraTech Cement, and in fact, many of the other cement stocks like Dalmia Bharat, India Cement, etc. Many of these stocks have shown signs of a pickup of pace or rally after being, seeing a selling for the last 4 or 5 trading sessions, which means that from current levels, UltraTech Cement can also see a reasonable bounce. My expectation is that the bounce should last towards at least 8350 to 8400 mark on the spot levels for UltraTech.
All right, so that's the view coming in on UltraTech. We're moving on, Lisa. Let's talk about Ujjivan Small Finance Bank, and why is this one in focus?
Right, so Ujjivan Small Finance, they have tied up with SMC Global Securities. Now we know SMC Global Securities, they provide trading solutions. It's a one-stop investment solutions that they provide. So with this strategic partnership that Ujjivan Small Finance Bank has announced, with this SMC Global Securities, they will be offering online trading services to the bank customers. And it's calling it a 3-in-1 account. They'll be offering services such as savings, demat, as well as trading accounts to Ujjivan Small Finance customers. And it will be a win-win situation for both these companies. Both these stocks are trading higher today. SMC with some marginal gains, and Ujjivan, it's more than 1% in early morning trade. Well, for SMC Global, the collaboration will help SMC Global to expand their client base, because they'll be leveraging on Ujjivan Small Finance pan-India presence, which serves around 76 lakh customers. And for Ujjivan Small Finance, the collaboration, the management said that the collaboration, it marks a significant milestones as it will provide enhanced investment opportunities to their customers. So, well, that's why we can see Ujjivan Small Finance, it's trending higher with a positive bias in today's session.
Moving on to stock number 11 for today, and put it in focus on Sheila Foam. Ankita, why is this one in focus?
Yes, Winnie, Sheila Foams is in focus today. Now, the shares of Sheila Foam had jumped nearly 3% in early trade today. But after it completed its QIP, it is cooled off a bit, and it is seeing an uptick of 0.1% right now. But this company, it closed its QIP on yesterday, and it allocated 1.1 crore equity shares at an issue price of 1,078 rupees per share, which was at a discount of 4.94% to the floor price of 1,133 rupees per share. Now, the company has raised approximately 1,200 crores from the QIP, according to the filing on the exchanges, and the proceeds of the QIP is likely to be used to reduce their debt and also to fund their growth initiatives. And on the back of that, we are seeing an uptick of 0.7% coming in on the stock right now.
All right, that's Sheila Foam for you. But Kunal, the one stock that you've always been bullish has been IDFC First Bank. But today, you've decided to talk about the parent company, that is IDFC. How is this one looking on the charts to you? Still spectacular returns expected?
Well, absolutely, yes. So both IDFC First Bank and IDFC Limited are very attractive, similar charts for themselves. IDFC Limited, and the reason for flagging of the stock is because of the slight edge the stock has in terms of the chart structure with respect to IDFC First Bank. IDFC Limited is now on the verge of breaking out about the previous swing highs of 130, 132. The stock had made this high in the first week of September. Post that it had gone to a mild correction. So looking at the market structure where the indices are under selling pressure, IDFC Limited is one of the few names from the mid-cap arena which is coming closer to a breakout rather than a breakdown. That's the differentiating chart structure for the stock. My expectation is that post the breakout above this 132 mark, IDFC Limited can rally towards at least 140, 142 over the very near term.
Let's move on and talk about Delta Corp, because that one has been on a losing streak since the last 6 trading sessions as well. And today also we're seeing that subdued, it's seeing a downtick of almost 2% as of now. Now Ashish Kacholia has actually sold 15 lakh shares, and that is around 0.5% of stake in the company. as well. Let's not forget, yesterday we did have the announcement that came in that the company had recently received one tax notice as well, which was of around 11,000 crores. And on the back of that, and its subsidiaries had received a tax note. Three subsidiaries received a tax notice of 5,600 crores approximately. So on the back of also that, pressure has been created on Delta Corp, and today also we are seeing the pressure is continuing after Ashish Kacholia has sold stake in the company.
Alright, that's Delta Corp for you, but let's talk about these EMS companies. Looks like that is a new set of theme that is coming about. After all the PSUs, everyone's talking only about EMS for a while now. So you have Amber Enterprises as well as Dixon Tech that are in focus. Both of these counters in focus on back of Jefferies' report that's come out this morning, where one, they're maintaining a whole stance on Dixon Tech with a target price of around 5,050 rupees per share, while for Amber Enterprises, they have a buy rating with a target price of 3,740 rupees per share. What they're saying is that Dixon and Amber both are key players on India indigenization, but vary in the business models. Also, what they're saying is that Dixon's revenue is diverse, while Amber is focused on components and ACs. Also, what Jefferies is noting is that Amber enjoys better margins due to backward integration, while Dixon's margins are lower due to 75% of OEM mix, and the capex and working capital are higher in the AC business, while Dixon's balance sheet is more asset-light. So basically, this particular report is a comparison between Dixon Tech as well as Amber Enterprise. But let's not forget that Jefferies is bullish on both of these counters, so that's why you're seeing a positive up move.
Let's move on and talk about Jyoti Labs, Kunal. This one, was not on the list of a lot of technical analysts a while ago. There's a new name coming in your list as well. In terms of last 6 months, especially last 3 months, that's when that up move started for Jyoti Labs as well. What is it looking like in terms of the technical levels and charts for you? Where do you see it moving now? 71% already uptick that we've seen in the last 3 months. What is the upside now?
It's a phenomenal breakout for Jyoti Labs because after remaining sideways for, I think if I'm not wrong, for almost 2 or 3 years, where the stock remained in the range of 250 and I think 175 broadly. This is the first time we are seeing the stock confirming a breakout, so it's managed to surpass the levels of 250. The last 2 or 3 months, we've seen exceptional volumes for Jyoti Labs, and this indicates that this may not be a short-lived breakout for the stock because of the way the volumes have surged and the price consolidation over the last 3-4 years for Jyoti Labs. And this also indicates that now the new support for the stock is also moved up higher. So from an earlier base of 170, 175, the base is now shifted higher to 250 plus for Jyoti Labs. So for traders who have a longer term kind of a time horizon, I think corrections or dips should be bought into. 250 could be a reasonable support for the stock over the medium to long term.
Alright, so that is Jyoti Labs for you. But Lisa, let's talk about Tata Steel, among the top gainers on the Nifty today, and why is that?
So Tata Steel, they have received an credit rating upgrade from international credit rating agency, that is Moody's. So Moody's have upgraded the corporate family rating of Tata Steel Limited from BA1 to Baa3, and they have also changed the outlook from positive to stable. Now, this is on the back of multiple factors. One, they expect the company's profitability to increase, and also considerable deleveraging also will happen on the back of debt reduction and also well-balanced capital allocation. Well, on the recent plans to set up the 3 metric tons per annum electric arc furnace, the Moody's said that one-off restructuring cost that may be incurred, but going forward it will improve the cost positioning of Tata Steel in UK, and with blast furnace that will arrest the losses that they were seeing. So overall the credit rating is positive for Tata Steel, and that is why we can see Tata Steel it's ticking up higher in today's trading session.
Absolutely, and on that note, let's also listen into what TV Narendran MD at Tata Steel had to say about this as well. He spoke exclusively to ET Now as well, so listen in.
I think it's a reflection of the work that has been done. I think they appreciated the fact that the way we are allocating capital and also the transition which is going on in Europe to address some of the legacy issues that we've been dealing with. So I think it's a good recognition of the efforts that the team has put in.
So H1 has been particularly difficult for companies considering inflation, interest rates, etc. What do you foresee for H2 of this year?
I expect H2 to be better than H1, certainly in India, because the demand continues to grow in India, and I think you see that in the auto sector, you see that in construction, in multiple sectors. Globally, things are still a bit weak because China is still struggling to come out of the post-COVID situation. Europe is also struggling a bit with high inflation. US has been more resilient. So globally, I think there's still a bit of fragility, but in India, things look good.
In India, things look good, but globally, there's a bit of fragility, as it were. So, could you expand a bit more on prices, considering that Europe, is not up to its full capacity in terms of growth? Same for China. The economy has been slowing post-COVID.
So, I think there are two things which are impacting prices. One is the fact that input costs continue to go up. If you see, of course, oil has gone up, not directly impacting steel so much, but it impacts freight costs. If you look at iron ore, prices have been drifting up. Coal prices have been very strong. So that's going to have an impact on steel prices. So that's one pressure which you will see. The other side is more the demand side, which you see more in India, because Indian steel companies are not exporting much and they're able to sell all they produce in India. So we are driven more by the domestic demand-supply situation, which looks quite strong.
Right. So one final question before we let you go. What's the timeline for completing the Port Albert plant of Tata Steel?
Well, there are, a lot of permissions that we need to get to transition to this new process route. Basically, we are looking at a 3-year kind of time frame to complete the whole process.
All right, so that was TV Narenjan of Tata Steel in exclusive conversation with ET now. But let's keep it going with another stock that is in focus, and that's Deepak Fertilizers. Kunal, how are the charts looking for this particular counter? Do you think that you can take a bet in this one right now?
Well, I'm quite bullish on Deepak Fertilizers over the near to medium term, and the best part is that the stock has already gone through a 50% correction in the last 1.5 odd years. So 2022 high for Deepak Fertilizer was around 1020, and the recent low for the stock was around 500-540 mark, which means that the stock has already gone through that sharp correction. It's showing signs of a recovery today, but more importantly, when we look at the charts over the last 2-3 months, it shows that the 500 mark has been acting as a major support. Major correction or retracement is over. The stock seems to have gone through a time-wise correction and is now getting up for a breakout. So the chart prospects look very attractive for Deepak Fertilizer from current levels.
Charts looking attractive for Deepak Fertilizers from current levels. That's the word coming in from Kunal. Let's move on and talk about Mangalore Chemical and Fertilizers. Ankita, why is this one in focus?
That's correct, Winnie. Mangalore Chemicals and Fertilizers is in focus today, and it is on the back of the fact that it has shut down the ammonia and urea plant that's planned for maintenance, and the production is scheduled to resume by the end of October this year. And on the back of that, we're seeing a downtick of 2% coming in on this counter.
All right, that's MCF for you. That is down in trade today. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, we'll discuss more stocks. Don't go anywhere.